It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
And welcome back to another episode of the Real Estate Breakfast as we cover once again the latest property news across your weekend every morning, including on a Saturday morning on iHeartRadio, Spotify, Apple Podcasts as well as Amazon. Yes, the weekend is tuned up. Saturday, March the 16th today. A busy real estate weekend for many right around the country. And good luck if you are hoping to zero in on a property deal. Now, this was pretty interesting. The Australian Taxation Office is facing criticism for its handling of outstanding tax debts dating back some years. While the ATO seeks to recover debts through tax return offsets, interest and penalties persist until the payment has been made. And you might have seen the ABC, they reported on this about a woman whose life has been literally upended by an unexpected tax debt allegedly dating back to 2008. A period which she thought was well behind her. She was blindsided, she says, by the ATO with a debt that she claims she knew nothing about. The debt is stemming from her ex-husband placing income into a trust under her name, and that now threatens her whole financial stability and the home that she fought so hard to secure and hold on to. So let's welcome in on our Saturday morning Anthony Landau, the Managing Director of Equilibria Finance. He is back, and a very good morning to you, Anthony. This is a very interesting twist going on with the ATO and a house that could be lost as a result of a debt this woman knew nothing about.
Yeah, good morning. Nice to be here again. Yeah, that sounds like a pretty distressing case for that homeowner. Obviously, a situation's come up they're not even aware of, and sometimes you wonder whether the ATO have bigger fish to fry, but obviously they're focusing on claiming back some unpaid tax from, in this case, 2008, 15 odd years ago. So I don't know the background of it all, but it sounds pretty distressing for the person involved, no doubt about that.
And you, I guess, would see many of these situations being in the mortgage game where a marriage has fallen over and you're dealing with the woman picking up the pieces. In a lot of cases, women just are not sort of privy to some of the finances that are going on in the background.
Yeah, we do get the unfortunate situation of a marriage breakup where assets are being split, and as part of that, obviously, there's existing debt, or there's one party trying to effectively buy out the other party and show they can service the debt. Yeah, we do get the odd situation where the family situation might be that the wife hasn't been managing a lot of those investments, whether it's property or other investments, and they're on a steep learning curve. So a lot of what we do in those cases is educate, counsel. There have been times when we've been sort of in the middle dealing with the husband and the wife independently in terms of unravelling it all. So it's quite a distressing situation for all the parties involved, and it can be an education at times for either the husband or wife who may not have been privy or across how it was historically structured, and that can be difficult in itself as well.
I remember, this is going back some time, my auntie, I was 17 at the time, my uncle had died, and my auntie didn't even know how to use a checkbook. He did all the finances, and it really just left her sort of at square one learning how financials actually operate.
Yeah, it can be really difficult and distressing. I mean, that situation highlights it. A lot of what we do in those situations is education and just being there, if you like, and whilst we're also trying to find a solution for them that makes sense for their future.
Yeah, exactly. So we are this morning going to have a look at rental affordability with Anthony. We'll come back after this and we'll talk just in terms of what is happening in that space in the market.
Every week, real estate transactions take place as the market shifts month by month. And every day, we keep you better informed and updated on the Real Estate Podcast.
And from CoreLogic this morning, if you follow all of the data, the numbers, let me give you a few on our Saturday morning to digest. Residential real estate values. Now, they soared to an historic high of 10.4 trillion by February's end. Now, that is up 10.3 trillion in the previous month. Quarterly national home value growth accelerated by 1.3% from January's 1.0%, with an annual surge of 8.9%. Now, that is the highest since the financials of 21-22 years. And Perth is leading in capital growth, with values up 5.2% in 3 months and 18.3% annually. National sales exceeded 500,000 yearly for the first time since December of 22. And despite a slight increase, vendor discount rates remain steady at minus 3.8%. So you can see what I mean. If you like to really get into the nitty-gritty of it, there are some numbers for you this morning.
Decode the property market with insider knowledge and insights to better navigate your real estate journey on the Real Estate Podcast.
And it is a real estate weekend, Saturday morning, and Australia, as mentioned, is in the grip of a rental affordability crisis, with soaring rentals making this the toughest rental market in decades. And Anthony Landau from Equilibria Finance is back with us. And Anthony, in a recent report by PropTrack Data, that is showing that rent affordability, now that has hit a 17-year low in Australia.
That's right. Some recent data that covers the whole of Australia, the breakdown state by state, region by region. But in overview, rental affordability has hit a 17-year low. Across the combined capital cities, rent has increased in Australia by 17% over the last 12 months. Vacancy rates nationally are now at a record low of 0.7%. So that really highlights the gap in supply and demand. The average cost to rent a house in Sydney now is $1,044 a week, which is 15% higher than 12 months ago. In Melbourne, average rents have increased $70 a week over the last 12 months, with some areas experiencing increases of up to 40% in Sydney, in Melbourne, in Brisbane. It's happening nationally. In Adelaide, we're seeing some suburbs increase their rents by 30%. Salaries are now being eaten up by rents with the increases in rents. More than 90 suburbs in Adelaide had recorded double-digit growth in weekly house rents. So it's happening nationally. And as I said, across the major capitals, over the last 12 months, rents have increased by 17%. Vacancy rates are now nationally at 0.7%.
Yeah, and of course, sort of stuck in the middle of all of that, we highlight this constantly, and that is those first home buyers trying to buy and get ahead of the curve, but of course they're paying more in rent, and a lot of them are saying, well, how did we get to this point?
Yeah, the first home buyer is an interesting one, and their challenge is obviously twofold. It's serviceability. How much will a bank lend them, and the deposit. So a lot of the analysis we're doing now with these increased rents is we've got buyers coming to us saying, hey, we're paying this much in rent. I reckon it's going to be now cheaper for us to take on a mortgage and try and buy a house. A lot of their deposit or their savings is either getting eaten up in rent, or they're struggling to put money aside, such as being the increase in rentals. So it's a real dilemma for a lot of home buyers, particularly first home buyers, with those initial challenges of building that deposit. Touching on that other part of the question, sort of how did this happen? I think it hasn't happened overnight. Australia's had this chronic supply and demand mismatch. But what we're seeing is a little bit of a perfect storm at the moment, where last 12, 18 months, investors have dropped out of the market a little bit. Income growth hasn't really been keeping up with the growth in rent. So a larger portion of people's income is now being put towards rent, which is really stretching affordability. and we've got these massive migration numbers. So we're essentially bringing in more renters in a market that's already got vacancy rates of 0.7%. So we really got to take a look at what we're doing here. Supply is not keeping up with demand. We're bringing additional demand in with these record migration rates. And on top of that, affordability stretched with income growth not keeping up with rent. So it's a real perfect storm we've hit. And that's coming through in the data that I've just gone through.
Yeah, and of course people will be wondering, how is this likely to change? If you look at the investors, now they are playing a key role in our economy and for renters. And are they coming back into the market?
They are, which is fantastic. Investors were very cautious through that rate rise period, and I know we've talked about that a little bit in the past, but we are actually seeing investors coming back into the market. Credit flows for investors are back up pretty close to the numbers they were before. Generally, investor credit sits at 30 to 35%. We're back at those levels. Through COVID and through that period of aggressive rate rising, that dropped down to 25%. We're seeing challenges in some markets. Land tax and tax on Airbnb properties and vacant properties is really impacting the Victorian market. But philosophically, investors are coming back into the market, and we've got to remember investors provide stock for renters. We can't lose sight of that. So there's this talk about getting rid of negative gearing. There's this talk about changing CGT concessions. Most investors are mum and dads. Most investors are plumbers, nurses and small business owners or salary earners who see property as a way to leverage into some wealth accumulation. It's important we don't lose sight of that because they're providing the stock for renters. But yeah, they're coming back in the market, which is encouraging.
Yeah, negative gearing. I mean, that is such a political hot potato, to coin a phrase, because it just gets kicked around from one political party to the other, and it sort of goes in cycles, doesn't it? You really never know what is likely on the horizon from one election to another.
Yeah, we've got to be really careful about negative gearing and suddenly bringing it in as a major tax reform. We got to remember what the benefits of negative gearing are and why it's there in the first place. New Zealand got rid of negative gearing 3, 4, 5 years ago, and the biggest impact it's had has been rental prices have gone up. Essentially, negative gearing is really a tax break for investors who are running a property cash flow negative throughout the course of a year. It's not causing our rental shortage. In fact, we don't want to disincentivise investors getting in the market. So it can get kicked around as a political hot potato, but my view is that I'd be really cautioning removing negative gearing from our tax system, given most investors are mum and dads, and it's not a quick fix to a broader structural problem with both our tax system and the supply in the market. The last thing we want to be doing is disincentivising investors at the moment.
All right, well, probably the last thing you don't want to be doing is getting out on that surfboard. You'd want to be leaving this podcast and hitting the water this morning, won't you?
Well, yeah, it's always nice on a Saturday morning to have a bit of time out and relax, and the surf's always not too far away. So you've whet the appetite there, so to speak. So, yeah, that might be on the radar sometime over the weekend.
All right, Anthony Landau, enjoy your weekend, enjoy your Saturday, and look forward to catching up again soon.
Look forward to it. Thanks, Craig. Have a nice weekend, mate.
Gain insights with exclusive conversations from real estate professionals about buying, selling and investing across Australia.
They had a little bit of wiggle room. They were able to put some terms and conditions into some contracts, but I think we're sort of past that point now, haven't we?
I think about June last year was the turning point for my specific market in City Beach, at least, where we saw the pendulum swing from being in favour of buyers, where it had been for over a decade, to really in favour of sellers. And you know, the suburb of City Beach and also wider Perth on a national scale are probably playing catch up with the East Coast.
We connect you to the best real estate information across Australia. The Real Estate Podcast.